Hey there! So, you're getting the hang of buying and selling stocks on the Afrinvestor 2.0 app. Awesome! But there's one thing you should know to really step up your investing game. That is order type. There are two types of order type on Afrinvestor: market orders and limit orders. Don't worry, I'll break it down for you. Nice and easy. Let's start with a simple analogy. Imagine you're in a busy market and you're either looking to buy or sell mangoes. You can either buy or sell at the price everyone else is paying, or you can set your own price and wait until someone agrees to sell or buy at your own price. That's basically the difference between a market order and a limit order. Understanding market orders. Let's start with market order. Think of it this way. You're at the market and you see mangoes selling for 500 naira per basket. You need them now, so you just go ahead and buy at that price. No questions, no haggling. That's what a market order does. It lets you buy or sell your stock at the current market price. So, when you place a market order on Afrinvestor, the app will automatically execute your trade at the current market price. It's straightforward, but keep in mind, the price might be slightly higher or lower than what you saw when you placed the order, specifically if the market is moving quickly. Understanding limit orders. Now, let's talk about limit orders. Imagine you're in the same market, but you're not in a rush. You think 500 naira is a bit too high, so you tell the seller, I'll pay 450 naira for these mangoes. Then you wait to see if the seller or the other seller will agree. If they don't agree, you then decide to wait till the price of mangoes generally reduce in the market. That's what a limit order is. It lets you set the price you're willing to buy or sell at, and the trade only happens if the stock hits that price. When you use limit order on Afrinvestor, you're telling the app, I want to buy this stock, but only if the price drops to my set amount, or I want to sell, but only if the price goes to this amount. It's a great way to control the price you get. But keep in mind, there's no guarantee your order will be filled if the market doesn't hit your price. Understanding limit period. One more thing to note. Whether you're using the market order or the limit order, you need to tell Afrinvestor how long you want it to keep trying to execute your buy or sell order. That's where limit period comes in. If you want the system to keep trying to buy or sell your stock within the day's trading cycle or the next 3 to 30 days, the limit period is what you'll use to set that. If your trade is not executed within the limit period you have set, the order will expire and you will see the status in your order history. When to use market versus limit orders. So, when should you use a market order and when should you use a limit order? If you need to buy or sell quickly and don't mind the current price, the market order is your best bet. But if you're looking to get a specific price and you are willing to wait, go for a limit order. Another key reason to use a limit order is that if there is no matching order available when you place a market order, it could be rejected. With a limit order, your request to buy or sell stays in the system until it matches your desired price. It's all about what works best for your investment strategy. And there you have it, market orders and limit orders explained. Now, you can make smarter decisions when buying and selling stock on Afrinvestor. Download the app and start investing today. Happy trading!